This is Let's Talk Energy, your go-to podcast for smart energy insights. I'm your host, Noah Brenner, and each week we're bringing you an inside look at the dynamics shaping global energy markets through in-depth conversations with our own Rystad Energy experts, as well as some special guests. In today's episode, we turn to Australia to look at how a country with large domestic reserves of coal and natural gas and some of the best wind and solar resources in the world still faces wild swings in power prices and potential supply shortages. Some of Australia's states and territories have the most volatile power markets in the world, including some of the longest periods of negative power prices. But while everyone can agree this is a problem, there are differing opinions as to the best ways to address it. The country's climate goals and energy policy continues to be a contentious domestic issue and is likely to come under global scrutiny as Australia pushes to host the COP31 climate conference next year. What is causing Australia's highly variable power prices, and are they likely to continue? Will the government keep its ambitious goals for renewable power capacity or look to other sources to keep supplies stable and prices affordable? And what can other countries struggling with incorporating rising shares of renewable power into their own grids learn from Australia's experience? I'm joined today from Oslo by Gero Farruggio, who heads up our business in Australia to help us understand what comes next for Australia's power system. Gero, welcome to the program.
Let's talk energy down under.
Well, let's talk energy. Set the scene for us a bit here. I mean, when it comes to Australia's power market, we said it's volatile, among the most volatile in the world, but just how volatile is this, and how do we even measure that in the first place?
So how you measure power price volatility? Well, you can compare power prices over a period of time, and this can be over 1 hour, 2 hour, or 4 hours. But if we take the 1 hour spread in Europe, for example, the difference is about $50. Now, this is rising with the increasing share of renewables. So it's quite right that this is getting headlines now, and developers and governments are looking closely at this. Now, we compare this to Australia. The spread over 1 hour is $500, so significantly higher. Now, it has a slightly higher penetration of renewables, about 40%. So you can understand why governments and developers around the world are looking at Australia and thinking, is this as bad as it's getting? And am I ready for this?
Break the power stack down for us a little bit. I mean, where are some of those other sources of power coming from? And how does that maybe compare to some other places where you mentioned the volatility as well?
Australia's got about 40% of renewable capacity, as we mentioned, and it's exciting because it's got a significant amount of coal generation that's looking to retire now. The target for the government is to hit 82% of renewables by 2030. Now, we think this is a bit of a stretch, and it's more likely going to be about 2037. Now, some have said we're a bit negative on this, and why are we not likely to hit the 2030? Well, we fully acknowledge that Australia's achieved some fantastic milestones when it comes to renewables. I think it's got the highest penetration of residential solar. It's got the highest deployment of utility solar in the world, and it's already achieved the highest utility scale battery generation per capita. So these are fantastic developments. But what we do at Rystad is we look at the planned projects and those under construction over the next 5 years, and we see those record levels still continuing. But what we don't see, and what we find hard to see, is that we're going to see double the record levels continuing over the next 5 years. But one wild card to that is, I would say, is residential batteries. Now, like I said, we've got the highest level of residential solar, and this is one of the also one of the challenges as well, the opportunities, because it causes a lot of these negative prices that Australia's experienced. So batteries has a real good opportunity, not only to address this, but address this quickly. And so that's a bit of a wild card that residential batteries could come in quite quickly over time.
I'm also interested, I mean, other places, thinking the US here, but other countries as well, are looking to kind of smooth out volatility in the power sector with additional baseload, whether that's gas, maybe in some instances coal fire, keeping coal plants open longer. Is that part of the discussion in Australia?
Well, now is the era of charge, baby, charge. And it's just the beginning. This is the tip of the iceberg when it comes to battery deployment. So, I think you've mentioned that you've been covering the energy sector for about just over 20 years. Yeah.
Hmm.
So, it's probably a little bit before that, but you remember the introduction of horizontal drilling and the impact that had on oil and gas production.
I remember it well.
That was a significant impact in terms of the production levels and the productivity for the oil and gas industry for very little extra costs. Batteries are like what horizontal drilling was for oil and gas back then. It's going to make a significant increase in the productivity of things like solar in particular, where solar was limited to about 5 to 8 hours per day. This can make solar 24/7.
As in many places, gas is kind of the marginal cost of supply for power in Australia. And while Australia is a massive LNG exporter, that gas isn't necessarily in the places that it needs to be or in the volumes that are required. What does the gas supply situation look like in Australia, and how does that influence some of the dynamics that we're seeing in power markets?
Well, a big problem with the power price volatility and the high power prices is high gas prices. And situation is bad in Australia and is going to get a lot worse, much worse, in fact. We may have a power supply crunch if coal exits too early. We may have a power supply crunch. We will have a domestic gas supply shortage. Even though we export gas on the East Coast, further up north, they are looking at 1 to 2 terminals to import gas, to import LNG further south on the East Coast. And this is to address this issue, not necessarily to drive down gas and power prices. It's important to say this won't bring power or gas prices down. What it will do is protect Australia from these high gas spikes. And like I say, at best, we will see gas prices spike, but obviously it can be much worse.
Are we projecting that there's the potential that Australia does become an LNG importer, at least in some portions of the country, I guess?
Yes, it's looking that way. There are certain things that may happen that can push that back, but it seemingly it's right now it's a matter of when and not if.
There's an old adage, whether it's in the oil industry or any other commodity market, I think that the cure for high prices is high prices. High prices will then stimulate supply that eventually meets demand, and it works itself out. Is that the case here? Is there an argument that this volatility is a temporary situation, that when enough storage comes into service, perhaps whether it's batteries or whether we're able to add enough renewables or additional supply, that the market looks quite different maybe into the future?
Well, let's match that old adage with a more regional proverb from Asia, which I think there's a crisis is an opportunity riding a dangerous wind. Certainly, a crisis to have certainly this high volatility when you're looking at the development of solar and wind farms in particular. You can't develop a solar farm and a wind farm and the economics working out when these are experiencing negative pricing or significant levels of curtailment. So when we're looking at solar, they've been experiencing in some of the states in Australia 2,000 hours of negative pricing. Now that's about 5 hours a day, right? So that's almost all the actual solar generation time. This revenue gets just eaten away with these negative pricings and these low capture rates. The opportunity here is for batteries. This thrives off high volatility. So this opportunity is bringing in a high level of battery activity at the moment.
Could you just sort of quickly break down when you say negative pricing and curtailment? Those two concepts. Could you just break down exactly what you mean when you're talking about those for those who might be new to power markets?
Australia has the highest level of rooftop solar, per capita, significantly higher than anywhere else in the world. And so we're generating a lot of solar. And when you combine that with utility solar as well, you're generating a lot of solar in the daytime, and that's creating surplus power supply. And when you combine that with a very rigid and inflexible coal baseload, which Australia has, then they can't turn down and respond to that as easily as some of the renewable energy can. So what you have is just basically oversupply in energy, and that results in significant negative pricing. And then you might say, well, these solar farms, they have offtake agreements, they have PPAs, and in Australia, the government's introduced a capacity investment scheme to protect, to give a floor for some of these projects, and this is absolutely true. But unfortunately, neither of these are protected against negative pricing. So if the power goes, below zero, then developers have to pay that price. And if that price is a little bit below, is below the offtake agreement you can still continue producing. But if that negative power price is above the offtake that you're getting, then you'll just basically stop producing, because otherwise it's just going to cost you. So that, in that respects, you see a high level of curtailment in Australia right now. About 30% of solar and wind generation is curtailed. It's just wasted. So this is potential that is a problem right now, but also an opportunity when you start thinking of things like batteries down the road. So is it all negative? Well, the thing is, with this negative pricing, it puts a lot more pressure. And if your goal, and it obviously depends where you sit, if your goal is to speed the transition along, this negative pricing puts a lot of pressure on these generators that can't suddenly turn off, and those include like your coal-fired generators, and they have to spend obviously enormous amount of money to continue generating, and then to actually have to pay to generate as well. So that, if anything, will speed on the transition. So a little bit of pain today, but the transition could actually go a little quicker.
I mean, one of the things I find fascinating about this situation is that energy really was a major issue in this last election, as you wrote in the commentary back in April. And I think that's something that those of us in the energy industry maybe often wish for, that energy was talked about more granularly in these political settings, but it doesn't always necessarily result in the best policy, or even in positive policy developments. And so, from your perspective, I mean, what needs to happen to create a more stable energy market? What are the policies that potentially could or should be on the table?
Now, it's fair to say that the government's done actually an incredible job when it looks at when you look at the policies that it has in place. When you think that utility scale solar is actually a relatively recent thing in Australia. It wasn't first to the party. I think Australia is actually probably one of the last countries to come to the party. It's just adopting it at an incredible rate. So when you look at that, some of the policies that were put in place have performed incredibly well. And yes, we've got the high volatility, but again, the market's doing its job there, and this is bringing on battery investment very quickly, and again, that will address that issue there. So what else can be done? Well, like it's the same problems that you're seeing anywhere around the world. Some of the challenges facing renewable deployment are the speed at which projects are permitted, and some of the other challenges are to do with the speed of investment in transmission and the grid. So while most countries and most governments are just trying to build out transmission to meet a potential demand in the short to medium term, you've got countries like China that are building transmission superhighways for the next 100 years. So I think if countries could look at that and start investing in the transmission, it will certainly speed things along, and give the opportunities for renewables to come in with maybe fewer of the challenges they're experiencing today.
So that grid built out that we've talked about in a number of different places, a fairly universal need for a modern power system. It seems like, particularly as we come out of less growth, less demand growth, and
Yeah.
into a much more kind of robust growth outlook.
And
But
to
I
add to
was
that, just
no,
the
go ahead.
final point on that one is just the gas price. I mean, we talked about
Okay.
the gas side of things and the importance of that. So obviously, a lower gas price for now, when the power prices are very dependent on gas, will help lower the power prices. Over time, and it's not too far away. They will be decoupled from the gas price as you see more solar and battery penetration. But for now, that gas price would still be an important part of driving down prices. And specifically for Australia, where we're experiencing very high domestic gas prices, we talked about potential domestic crunch, then actually if the government could help drive down that gas price, it would be quite a big help in terms of the downward pressure on pricing for power.
So gas price policy is important when we're thinking about overall power price dynamics. I wanted to talk a little bit about behind the grid or behind the meter, off grid power. Um, whether it's hyperscalers is being talked about here in the U.S., other places. The impact of data centers on power supply and on power demand. Um, as well, in Australia, it's mining, a massive mining sector that also has a huge power requirement. And so, how are some of these behind the meter uses developing in Australia? Is that pressuring the grid linked power market? Kind of what are we seeing there?
Like the US, the Australian power market is not just one market. We have an East Coast market, we have the West Coast market, and to some extent, like we mentioned, the Southern Australian market. But we also have this significant off-grid or distributed market as well. And like you mentioned, it's miners, the data centers. We also have an incredible potential industry where we're looking at energy exports via wire, via subsea cables, or potentially by hydrogen. These are a long way off, but these are all part of this off-grid potential that the country has. And it's not insignificant. When we're looking at the size of the off-grid market, it's potential bigger than the South Australian market itself. It's huge. And you mentioned the miners. They're some of the most progressive companies in country at the moment, not only procuring renewable energy or developing the projects, but are really pushing the boundaries when it comes to new technologies as well, like hydrogen and in particular the storage side. They're really pushing the investment and the technologies there.
Now, you mentioned earlier in the program Australia's aggressive targets to retire coal fired power. And that's driven in part by Australia's emissions targets. But at the same point, I mean, we have seen other countries waver on their emissions targets. And I do wonder, is that possible here? Could the dynamics we're seeing impact, those goals as well? And finally, I mean, does Australia's bid to host the next COP enter into that decision making? Do you think? Talk to us a little bit about how emissions are playing a part here.
In the short term, it's definitely the coal retirements. These are aging plants, and about 50% of this capacity has come out by the end of the decade anyway. And there's not much they can do about that. If Australia could have stuck with coal over the last decade or two, it probably would have. But unfortunately, it can't. There's no appetite to build new coal plants, whether that's the financing or actually to build them. But also, that ship has sailed a long time ago. The economics of new coal plants versus renewables, that ship sailed a while back. The question then is, will it delay any closures of coal-fired power plants? Well, that's almost inevitable. It will. We've already seen Queensland announce that they're not going to close its coal plants, and they're likely to, if anything, extend them. And this is not necessarily just an Australian thing. We're actually seeing this globally as well. As long as these coal plants are making money, they'll continue to produce. I mean, there's no government around that can afford to hit an emissions target at the cost of higher power prices today. I mean, elections have been lost on far less than this. So I think you will see some delays. With regards to COP, it's fantastic. Australia is bidding to host it, and I hope it does, and it certainly deserves to, and highlight some of its great achievements, but also some of the risks to the wider uh, Pacific region of no action. But there's also a risk here that these debates, like the questions that you're asking, are played out in the headlines around about when COP would happen in Australia. So we already mentioned that we potentially have, a power supply crunch around then, and potentially gas supply issues. So to have these debates about extending coal and importing gas around about while COP is happening in country is not ideal. But this is the risk there, and it's inevitable again that these debates will be had, and these will be making headlines around about the time of such event.
You mentioned a little earlier on in the program about how you pointed out China is building these highways for renewable power to move electrons through the country. And upgrading their grid. What else, looking at Australia, what can other countries perhaps take either from what Australia has done or what it didn't do or what it's thinking about doing as they're starting to face their own issues with, we've seen higher negative pricing and curtailments in Europe. We're seeing it in certain parts of the US grid, particularly Texas and places like that where there's high renewables penetration. Are there certain lessons maybe that other countries could take from Australia or tips?
I think the one thing we can take away from the energy transition so far in Australia is that every technology will have its day in the sun. I think right now it's batteries. But for years these power markets were really, really stable. The supply was stable, the demand was stable. It's actually quite boring. But volatility presents this opportunity for value creation, and that you've covered over the recent weeks are summits across the world where the focus was on value creation. And this volatility that's coming into the power markets gives the companies the opportunity to really create and capture value. And I think they are ready and embracing this.
Power is no longer boring, as you say, and perhaps for better and for worse. But I think that's a really good spot to put a bow around our discussion. Gero, thank you so much for joining us on the program.
Thank you, Noah, and we hope to see you in Australia soon.
Let's recap. High penetration of renewable energy, declining capacity for dispatchable power from, say, coal-fired power plants, and tight natural gas supplies have created record levels of volatility in Australia's power market. That volatility is a significant opportunity for developers of battery storage who can profit by dispatching power when prices spike. Australia's experience is likely extreme, but it's not unique necessarily, and other countries will have to face similar tough decisions about how to construct their power systems to create the most stable and affordable supplies. Thanks for listening to Let's Talk Energy. This podcast is a Rystad Energy production, produced by Laura Rodriguez-Skaug and Bada Og. Check out the show notes for further analysis on today's topics, and you can connect with us on social media. We're at Rystad Energy on all your major platforms. While you're there, leave us a review and hit that subscribe button. You can also keep up to date on our website. If you'd like to send us a question or reflect on something you've heard in today's show, email us directly. It's podcast@rystadenergy.com. And most importantly, don't forget to join us next week for more Let's Talk Energy.